Hello everyone, today I will present our case study on the acquisitions and privatization of IJM Land Berhad by IJM Corporation Berhad. Merger and acquisitions are corporate strategy used to expand business and strengthen competitiveness. A merger combines two companies into one, while an acquisitions occur when one company takes control of another. For this case, IJM Corporation acquired the remaining share of IJM Land in 2014, and in 2015, IJM Land became its wholly owned subsidiary. Before discussing the acquisitions, let me introduce the two companies. IJM Corporation Berhad is the acquiring company, established in 1983 through the merger of three construction companies. It operates in construction, property development, infrastructure, manufacturing, and plantation across Malaysia, India, Indonesia, Chinese, and the UAE. IJM Land Berhad is the target company and one of Malaysia's leading property developer. Although listed on Bursa Malaysia, IJM Corporation already held a controlling interest. In 2015, IJM privatized IJM Land to improve operational efficiency, simplify its corporate structure, and strengthen coordination between its construction and property divisions. This slide shows the key milestone from 2014 to 2016. In 2014, IJM proposed to privatize IJM Land through a member scheme of arrangement. At that time, it owned about 64.2% of IJM Land and offered Rm 3.55 per share for the remaining share to simplify its corporate structure and improve efficiency. In 2015, the privatization was complete. IJM increased its ownership to 100%. IJM Land became its wholly owned subsidiary and it was delisted from Bursa Malaysia. In 2016, IJM fully integrated IJM Land into the group, improving coordination, reducing administrative duplications, supporting larger property projects, and strengthening long-term competitiveness. This transaction is classified as an acquisition through privatization. It is not considered a merger because IJM Corporation and IJM Land did not combine to form a new company. Before the transactions, IJM Corporation already owns about 64% of IJM Land. Through the privatization process, it acquired the remaining share held by minority shareholder, increasing its ownership to 100% in 2015. As a result, IJM Land became its wholly owned subsidiary of IJM Corporations. These acquisitions also strengthened the integration between IJM construction and property development business, allowing the company to improve coordination and operate more efficiently. There were several important reasons why IJM Corporation decided to acquire IJM Land. The first reason was operational synergy. By fully integrating the construction and property development businesses, IJM could improve coordination, speed up decision-making, and make better use of its resources. The second reason was financial synergy. After the acquisitions, IJM gained full control over IJM Land's financial resources. This enabled the company to manage its capital and cash flow more efficiently across the entire group. The third reason was cost saving. Before the privatizations, both companies had separate board, audit system, and regulatory compliance requirements. By combining this function under one company, IJM was able to reduce administrative costs and improve overall efficiency. The acquisitions also enhanced capital allocations as management could distribute financial resources more effectively among its construction, property, infrastructure, and other business divisions to maximize return. In addition, the acquisition strengthened IJM market positions by consolidating its property business under one corporate structure. This improved its ability to undertake larger projects and increase investor confidence. Finally, the acquisition supports long-term strategic growth by simplifying the corporate structure and providing greater flexibility for future investment and business expansion.
Next, I will be representing the liquidity ratio analysis of IJM Corporation Berhad before and after the merger and acquisition. The financial data used in this analysis were obtained from the IJM Corporation Berhad annual reports for the financial years 2040 and 2060. Specifically, the figures were extracted from the consolidated statement of financial position, where the information such as the current asset, inventories, and current liabilities was used to calculate the liquidity ratios. Liquidity ratios are important because they measure a company's ability to meet its short-term financial obligation. In this analysis, we will focus on two liquidity ratios, namely the current ratio and the quick ratio. First, let's look at the current ratio. The current ratio measures the company's ability to pay its short-term liabilities using its current asset. In 2040, IJM recorded a current ratio of 2.06 times. This means that for every 1 ringgit of current liabilities, the company had RM 2.06 of current asset available to meet its short-term obligation. In 2016, the current ratio increased to 2.98 times. This improvement indicates that the company's liquidity position becomes stronger during the year of the merger and acquisition. It also shows that IJM had a greater ability to meet its short-term obligation and maintain a healthier working capital position. Next, let's move on to the quick ratio. The quick ratio measures the company's ability to settle its short-term liabilities using only its most liquid asset, excluding the inventories. In 2040, IJM quick ratio was 1.93 times and it is increased to 2.69 times in 2060. The increase in the quick ratio indicates that the company's immediate liquidity improved after the merger and acquisition. This means IJM was in a stronger financial position to pay its short-term obligation without relying on the sale of inventories. Overall, the higher quick ratio reflects better liquidity management and greater short-term financial stability. In conclusion, both the current ratio and quick ratio show an increasing trend from 2040 to 2060. This suggests that IJM's liquidity position improved after the merger and acquisition, indicating that the company was more capable of meeting its short-term financial obligation and maintaining a stronger financial position.
From the analysis of the Statement of Comprehensive Income (SOCI) and Statement of Financial Position (SOFP) in the annual report, we can see that ROA decreased from 4.51% to 4.00%, meaning IJM generated slightly lower returns for every RM1 of asset after the M&A. This shows that asset efficiency has reduced a bit compared to before. Next, ROE also declined from 12.31% to 8.79%, indicating that return to shareholder were lower after the M&A. This suggests that although that company has a large equity base, is it not generating profit at the same level as before? However, net profit margin slightly changed from 30.81% to 15.47%, which indicates that profit per RM1 of revenue remained quite stable, with a slight improvement after the M&A. This shows that the company is still able to control its operating efficiency. Overall, we can conclude that IJM profitability shows a slight decline after the M&A 2016 compared to 2015. Although total asset and equity increased, profit did not grow at the same rate, which caused ROA and ROE to decrease. However, the stable net profit margin shows that operational efficiency is still maintained, and full benefit of the M&A may only be seen in the long term as integration continues.
I will present the activity ratio, which include inventory turnover, receivables turnover, and total asset turnover. First is inventory turnover. The ratio decreased from 5.56 times in 2014 to 5.16 times in 2016. This means the company sold and replaced its inventory slightly more slowly after the merger, indicating a small decline in inventory management efficiency. Next is receivable turnover. The ratio from 4.39 times in 2014 to 3.93 times in 2016. This shows that the company took longer to collect payment from customers, which could affect its cash flow and short-term liquidity. Lastly, total asset turnover decreased from 0.36 times in 2014 to 0.29 times in 2016. This means the company generated less revenue from its asset after the merger because the newly acquired assets need time to contribute to operation.
Hi, my name is Arfa. Next, I will present the debt ratio analysis by comparing IJM Corporation's financial position before and after the merger using three key ratios. Before I begin, you may notice that both the debt ratio and the debt to equity ratio are 53.22% in 2014. This is because in 2014, the company's total debt and shareholders' equity were almost equal in value, so both ratios happen to produce the same percentage. However, they measure different aspects of financial leverage. First one is the debt ratio. The debt ratio decreased from 53.22% in 2014 to 48.35% in 2016, representing a 4.87% reduction. This means that after the merger, less than half of the company's assets were financed through debt. Overall, this indicates lower financial risk and a stronger long-term solvency position. Next is the debt to equity ratio. This ratio increased from 53.22% to 56.86%, an increase of 3.64%. The increase suggests that the company relied more on long-term debt financing relative to shareholders' equity after the merger. As a result, financial leverage increased, which also raises the level of risk borne by equity holders. And lastly, the times interest earned, or TIE ratio decreased slightly from 7.73 times to 7.69 times. Although this reflects a small decline in the company's ability to cover interest expenses, the ratio remains relatively high, indicating that the company is still financially capable of meeting its interest obligations after the merger. Overall, the merger strengthened IJM's asset financing by reducing its debt ratio, but it also increased reliance on debt financing and slightly weakened its interest coverage. Thank you from me.
Next, I will be presenting about the company's market ratio for the year 2014 and 2016. First is earning per share, which is EPS. EPS measure how much profit is earned for each ordinary share. In 2014, the EPS was 59 ringgit and 6 cent, but it decreased significantly to 22 ringgit 22 cent in 2016. This decline indicates that the company generates lower earning for its shareholder and may reflect weaker financial performance. Second is the price to earning ratio, or PE ratio. This ratio increased from 10.14 times in 2014 to 15.89 times in 2016. Although earning decreased, investors were willing to pay more for each ringgit of earnings, showing that the market still had confidence in the company's future growth potential. Lastly, the market to book ratio increased slightly from 1.30 times in 2014 to 1.40 times in 2016. This means that the market valued the company higher than its book value and suggests a modest improvement in market sentiment towards the company. Overall, despite the decline in profitability as shown by the EPS, the increase in the PE ratios and market-to-book ratio indicates that investors remain optimistic about the company's future prospects. That's all for the market ratio analysis. I will now pass the presentation to my next group member to continue with the next section. Thank you and Assalamualaikum.
Starting with the positive impact, the company liquidity improved significantly. The current ratio increased from 2.06 to 2.98, while the quick ratio rose from 1.93 to 2.69, showing that IJM was better able to meet its short-term obligations. The debt ratio also declined from 53.22% to 48.35%, indicating stronger financial stability. In addition, the net profit margin improved, meaning the company retained more profit from its revenue. The increase in the PE and market-to-book ratio also suggests that investors remain optimistic about the company's future growth. However, there were several negative impacts. Both return on asset and return on equity declined, showing that the company generated lower return from its asset and shareholder investment. Operational efficiency also weakened because the inventory turnover, receivable turnover, and total asset turnover ratio all decreased. Furthermore, earnings per share dropped significantly due to lower net profit and the increase in the number of shares after the privatizations. In conclusion, the acquisitions of IJM Land by IJM Corporation was a strategically important decision. It allowed IJM to gain full ownership of its property business, simplify its corporate structure, and strengthen overall management control. Although the financial ratio analysis showed mixed results, the company experienced improvement in liquidity and financial stability. At the same time, profitability and operational efficiency declined in the short term, mainly because property development projects require a longer period before they can generate return. Therefore, we can conclude that the acquisitions were strategically successful, even the financial benefits were not immediately reflected in all performance indicators. Moving forward, IJM should continue to improve operational efficiency, manage costs effectively, and allocate capital wisely. This effort will help the company maximize the long-term benefit of the acquisitions and create greater value for the shareholder. That's all from us. Thank you.